What's up guys, my name is Kevin Murray, and today I'll be talking about the most common question in investing. Should I start investing into the market when everything is at all-time highs right now, when we've been in the bull market since the crash of 2020? Like, what should I do? Should I wait for the next crash? Should I start saving my money? Or should I just start investing now? Currently, right now, the time I'm making this. Most of the market or the main indexes in the US are at all-time highs right now. Haven't we always been at an all-time high in the market? And if we look at throughout history, we always had a new high and we always broke it. If you look at the history of the market, the 150 plus years of data we have, what do we see? A straight line up exponentially. But if you look at the day-to-day charts and the year charts, we see ups and downs, ups and downs, ups and downs. Little corrections, crashes, bull markets, meaning the market is green, it's going up. And we see times and periods when the market doesn't do anything. And sure, if you're an investor into an index fund, you might see in the next coming years a little stagnation, a little to no gains, or maybe even conservative gains. I could completely be wrong with this, but you never know. No one can predict the market in the short term, but in the long term, the market always going up. And if you're an investor and you're picking individual stocks, that's not like really the case. You're basing on the company's fundamentals, their valuations, and you don't really care what the overall index does. The index gives you an overall how the market is actually doing from all the different sectors in the market, from tech to basic materials to recovery, travel, semiconductors, high growth, small caps. But there's always deals in the market when you're investing in the market, individual stocks. And most of the population on earth, or people that actually invest, really just invest into index funds and cost average up. But if you take the time and energy to do this type of work, willing to take the effort reading 10Ks, 10Qs, and understanding things on a high level, and just trusting the process with it, you could separate yourself and make gains of 15 to 20% each and every single year on average, but it takes work. And if you want to start investing now and you don't want to do the work of investing and picking stocks for yourself, invest into index funds and cost average up. Who cares what happens to the stock market in the short term? You only care what happens in the long term, making conservative returns like between 6 and 8%. And that's it. Maxing out your Roth IRA, maxing out your 401k, picking the most aggressive fund, and also just investing in companies you use and understand on a high level. If you're a new investor or experienced investor, we know the market is going to be volatile. We're going to see a lot of short-term drama, all-time highs, but if you're in it for the long term, next 10 to 15 years, isn't this going to be just pennies on the dollars of these companies we're investing in or indexes? In the next 5 years, do you see our economy going up or going down or being stagnant? There could be a lot of variables in the short term, but in the long term, it's going to be a game. It's going to be a journey. And you shouldn't be worried about what happens to the market in the short term. You got to get your emotions right and think rationally and know and understand confidently what am I freaking investing in. Thank you for watching and peace out.